Have you ever messed up with a trade because you got emotional as the price moved? Or maybe the trade took way too long and you got frustrated? Well, in this video, you're going to learn why patience is a fundamental skill for being a profitable trader. So let's go back to the beginning of this trade and let me show you how we manage it throughout. Today I want to show you a slightly different setup with the bottom stop signal and the RSI exhaustion indicators. Additionally, I'm also using the levels and zones, which I typically use for extra reference in building my setups as as an additional confirmation that the setup and the overall analysis is correct. So if you're new to the channel, feel free to subscribe to see more videos like the one you are about to see, where we like to analyze the market the minimalist way. So by keeping it simple and using clear and simple indicators. So let's get to the setup. What we see here is the US dollar versus Swiss franc on the 15 minutes time frame. And we recently had an up movement and then kind of a retracement, and then I'm looking for another up movement about the same size of this one. Why? Well, because as you can see here, we had the RSI which was way oversold and also exhausted. You see the bearish exhaustion because the RSI is red. Then it went all the way up to overbought, and it also got a bullish exhausted when it was approaching the overbought situation. And then it went back down, and it's not currently oversold, but it became exhausted as well again. And in about the same time that we had this exhaustion, we are also having this another bottom here. You see the bottom here? It is a bottom, and it is confirmed because we have waited the close of the next candle, which is this one. You should always wait the close of the next candle so that you are sure that the signal on the previous candle is confirmed. So this is a bottom. What we typically like to see when we use the bottom stop signal and the RSI exhaustion is divergence. So what we typically like to see is that we have maybe one bottom here and one bottom maybe lower than this one, but at the same time we like to see divergence in the RSI, like in this case where the RSI goes up. In this situation, instead, we don't have a lower bottom, but instead we have a way higher bottom. You see? So we don't have divergence, which is the first condition that we typically check with these two indicators. However, what we have here is a very common situation that happens in the market. So basically, you have one bottom and then another bottom sometimes later, which is quite substantially higher. At the same time, when the first bottom appeared, the RSI was way oversold and exhausted as well, just like in this situation. Then the RSI went up following the same price action, and hopefully it also became overbought and exhausted as well, just like in this case. And then you see the RSI coming back down, but not to an oversold situation. It usually stops somewhere in between, maybe 50, 40, around here is, let's see, 33. Yeah, it's okay, but usually you want to see a very nice uptrend in the RSI as well. And when you see this bottoming of the RSI, which must become exhausted, like in this case, you also see the other bottom, the second bottom. So this is usually a very great indication that we should expect a second upward movement about the same size of the previous one. So we just take let me cancel this this trend line here. So we might expect to have another impulse like this one. So I just take this one, clone it, and project it to the upside starting from the lowest point here. So we should end up with, if the price moves higher like I'm expecting, then we should end up about here at 0.975. So the order looks like this. The entry price is about here. The stop loss, of course, we can stay pretty close to the most recent lowest value here. And for the target, very simple, we just project the target up to this level here. So we should expect a risk-reward ratio of about 4x, which is very, very nice. So the order is like this. Let's just now wait and see what happens with the price action. A quick update, guys, the price is just moving higher like crazy, so it's moving pretty fast. So let's just hope that it keeps moving higher so that we soon reach the target. I'd say that our analysis looks like it was correct, like it is most of the times. I just like to point out that we had here, up here, this resistance level, which is displayed by the levels and zones. Of course, when I made my analysis, I didn't say it before, but of course I knew that this resistance was there. So it is something that you should always be aware of, because the price might stop around this area here, might retest the resistance and then come back down. So you should be aware of. But since we know that when we have this kind of setup, we usually get another upward movement about the same size, the reasoning that I made was that if the price would have broken to the upside the resistance, then it would have become a support like it is right now. So this support right now, since the price is now higher, is the one that is protecting us from probably taking a losing trade, because if the price now decides to come down, we should probably expect that it will stop at this level here, because this is a significant support. For the sake of safety, however, since the price just moved straight up, I place my stop loss. I moved my stop loss to break even. So I'm now at break even already. In the worst case scenario, if the price comes back down and breaks down this support as well, it comes back down all the way to the entry price. But guess what? The trade gets closed before the entry price, so that I still make a little bit of money. But most importantly, I don't lose any money, because right now my close price in the worst case scenario is this one, which is above my entry price. So right now I'm on a risk-free trade. In the worst case scenario, I do not lose any money. Actually, I make a little bit of money. In the best case scenario, I make a 4x return, and this is the typical trade that we take here. Also, I see the RSI, which is moving higher and it's getting exhausted, which is good because it means that the price action is sustained. So let's just now hope that the price continues to move this fast, even though it's not necessary granted, because I mean, as you can see also here, the price started moving very quickly and then it slowed down, but eventually got to its desired level. So this is our desired level. Let's just wait and I'll keep you posted. So the price moved a bit higher and then started to slow down. The concerning thing here is that we had a first top, which it's not a big deal, but then we had another top, a second top, and they are slightly, the second one is slightly higher, but the concerning thing is that the RSI, it's way lower. So this is the typical, let me cancel this line here. So this is the typical scenario in where we place a sell order, because we have a top which is higher than the previous one while the RSI is lower, so we have divergence. We also have the RSI Exhaustion in coincidence with the second top, and we also have the top which is confirmed. So this is technically a valid sell setup, which is a little bit of a concern in this trade, because the price might come down and it maybe eventually go even lower than this initial point here, this initial bottom. However, we are aware of the fact that we are sitting on a trade where we can be safe with this support level here, which is a major support level, and also because we are at break even. So if the price comes back down, it should first stop here, but in the worst case scenario, if it comes all the way back down, we end up with still a winning trade, even though it's technically not a big win, it's just a little win. But the most important thing is that we don't lose any money. So we just need to stay rational. The price might, in this case, might come down, but if it comes down, we should be safe enough. Let's see how this evolves, because it's getting pretty interesting. We are not that far from the target, but right now the situation looks a little bit bearish. And by the way, guys, of course, when you have this kind of situation, you can decide to close the trade, or and maybe open a trade to the opposite side. So you might want to sell at this level, right? That we have that we are right now, with a target, I'd say this support level here. What I typically do when I'm in this kind of situations, when I'm on one side of the trade, so I'm bullish here, and I see something that goes beyond my view of the market, if I am safe, like in this case that I'm already at break even and I also can count on this major support here, I typically don't close the trade. I just let it go. I'm patient. I'm not compromising the trade, because I believe that the initial analysis that we made here is still valid. When you have this kind of setup, this kind of price action, then you should always expect an impulsive movement about the same size of the previous one. So I'm still confident that we can reach this level. This is something that is just getting in between us and our target, so we must deal with the situation. But since right now I'm safe enough, I just keep the trade open. Another update, so it looks like the price made some noisy stuff around here, and then as we predicted as a potential movement, the price went down, because we had we got a third top here, and then the price went down to retest this support, which it looks like it's preventing the price from falling further, because you see the price went lower and tried to keep lower, but then it closed actually closed at the support level. It never closed below this sell area here in red. So it looks like this major level is doing its job fine. We also had 1 and 2 bottom signals here. Of course, these are just signals to be ignored because there is no evidence in the RSI that these are real signals, in the sense that I don't see any divergence between maybe the price action and the RSI exhaustion. So you can just ignore these signals, even though they look like being bottom. So some traders might believe this is a bullish setup, but the point is that we had a bearish setup here. So the price could have fallen, and in fact it has fallen. I still believe that this is playing a major support to our trade, because indeed it is a major support. But of course we need to wait and see. The interesting thing is that now the RSI went oversold and exhausted as well, so it might be over. Of course the RSI might go even lower and keep oversold and exhausted for a prolonged period of time, but since we are sitting on a support line, I expect that the RSI will not go much lower than this, and most importantly the price will not go much lower than this. I am confident that the price can, from this level, can rebound and move higher to make the final up movement to our target. This trade is getting very interesting, and actually we can learn so much from this trade, because right now we have a similar setup to the previous one. We have a double top, so 1 and 2 tops. The price is pretty much at the same level, but the RSI is going lower. So we still technically have divergence, and this is another bearish setup. However, this is weaker than the previous one, because if you see the previous one, we had the price moving higher. Instead here the price is moving sideways, and previously we had the RSI which was overbought here and higher here. In this case, instead, the RSI is not even overbought here, and it is lower here, lower than this case here. So this is it is still a bearish setup, so the price might come back down again another time, just like it happened here, where the price rebounded here and then came back down and then tried another time. So it might come down a 4th time, but this is a sell setup, but it's weak. So I'm expecting that if the price comes back down, it is still able to rebound, and let's hope to make a final move to the upside to reach our target. So right now I'm just staying into this trade. What I did was to move the break-even point higher, just to make a bit more of money. In the worst case scenario, that if the price comes back down, I'm now out at this level. Why did I choose this level? Because I decided to stay a bit lower than this week here. Of course, if you want to be a bit more aggressive with your close level, in this case break-even level, you can go even higher, at least at this level here, or maybe just a bit below this support line, because as you can see, this support is very much helping us. It's a very strong support that the levels and zone is giving us. So you could play with this and the break-even level to go closer to this. I just stay here for the sake of safety, since we recently had another sell setup, but I mean, the trade is still okay. Since this support level proved to be a very strong support level. So let's just be a bit more patient, don't get emotional at all, and wait and see what happens. We are now out of the trade with a profit, guys. So we made a 4x profit. As you can see here, I have extended this order area here. So as you can see, the price just went past our target. Previously we had this setup that we commented before. As you can see, it was a weaker setup. We had a move to the downside, but it was weaker. So it didn't even move closer to this support here, and then we got a bottom, which, yeah, maybe you could have traded if you were not engaged into this trade, because it's a pretty similar setup to the one that we used to start the trade. Because as you can see, we have an exhaustion here. We don't have a bottom signal, but it is from the price action we can clearly see that this is considered a bottom. So we have one here and another one here. The RSI is increasing, and we also have exhaustion in both cases. In between, we had an upward movement of the RSI, which became exhausted. It was not overbought, but we knew that this was kind of a minor price action, minor signals. But of course, you could have traded this one if you were not engaged in the one that we were. The most important thing is that we kept throughout our trade, we kept rational. We didn't get emotional. It was a pretty long trade for a 15-minute time frame. I usually take shorter trades, or I mean, usually the trades on 15 minutes last less than this one, but the key thing is that we got what we wanted. So we are now out of the trade with a 4x return, which means that we can potentially lose the next 4 trades straight and then still be profitable, which is absolutely phenomenal. So guys, I hope you enjoyed this video. If you did, be sure to subscribe and like the video. If you have any question, feel free to ask down below, and I'll see you guys in the next one.